everybody, this is Nagman back with another video. I skipped a week, but I'm going to do my best to give you an overview of what happened with my portfolio over the last week and a half. So stay tuned because I'm going to go over how my portfolio did compared to the S&P 500 and the plays that I took in the last week going into next week, and what happened with the shares that I was holding with some of the companies that actually had earnings in the previous week. So we'll go over all of that heights. So let's get into it. For the recap, this past week was pretty damn brutal. Beginning of the week, we were at 119,000. And as we progressed through the week, we fell harder and harder. And yeah, I mean, sometimes that's just how it is. You see, even right up until July 31st, we were doing okay. We were still outpacing S&P 500. The ETF that I compare my portfolio against is the SPY. But we're doing okay. But then, as you know, I have shares of UPS and PayPal. So both of these guys reported their earnings last week. I was not selling any covered calls on these positions. I really wanted to go through the earnings period and reevaluate from there. And it just happens to be that UPS being around $104 right before earnings. And as we got closer and closer, it gave up some of the gains, and then bam, that thing just took a nosedive. So as you can see down here, I was up about a couple $100 on my position. From there, after the earnings, it just kept selling off and off and off, and I'm down 15, almost 16%. So that equates to $1,600. I don't know what I'm gonna do just yet. I have to continue to do some more research. Either I'm going to sell more cash secure puts if I feel comfortable enough holding the stock, but I'll have to see. I really would have to see how the company's doing, if I believe in it, given the recent information that we have been given. So I'm going to keep you guys up to date on that. But I do have some decent amount of cash on the side that I can deploy, so that is definitely something that I would. It's part of the toolbox. So let's see. I have not made up my mind just yet. I don't think. I don't think I need to rush. I think that's the big thing. I don't think I need to rush. I'm gonna let the dust settle and make an educated decision that seems the best given the information that I have. So I'll definitely keep you guys updated on that. And the other one was PayPal. Unfortunately, PayPal was not much better. As you can see, we were doing pretty good. Even like leading into the earnings, PayPal was on a big run up. And then I thought the earnings were pretty solid. I don't really understand this sell off, which was, man, this was so steep. This was so steep. That killed me, man. We went from being up like more a little bit over 10% to now being minus 2%. The good thing here is that my average cost for PayPal was actually lower, so we were more in the positive at that point. So it doesn't hurt as much. I mean, even though we lost the gains that we had made, but we're not too much far down in the negative. And if I'm being honest, I think I have more conviction in PayPal in the long term than UPS. So that's something that I'm juggling back and forth right now. What is it that I'm going to do between PayPal, UPS? Because as I said, I do have some cash. You see, it's almost $2,000, but that doesn't tell you the whole story, because I've been keeping my cash in this ETF. This is the 0 to 3 month treasury bond. the SGOV. So I'm keeping 34, almost $35,000 in here. And this is just really, and this makes up about 31% of my portfolio right now. And it's really just to get you some yield on my cash while I'm waiting to make a decision on what I need to do. So if that's almost 35,000 plus two, so that's 37,000. So we've got some wiggle room. We just have to make some good decisions going forward, and we'll see where to go from there. The other thing, I did sell a covered call on Google last week. I didn't get to cover it with you guys. This was a busy week and I didn't have a lot of time to edit. But as you can see, I had sold a $200 covered call that expired last Friday, collected $67 there. And obviously with the market sell-off, Google also went down and that expired worthless. It did go down from 196 to 199, so that's down about $700, but I got $67 back. I'm not looking to get rich. It's just more of like a collecting dividend scheme. I do believe in the company long term, so the whole point is I'm going to collect a little bit money here and there. As I hold these shares. So I'm paying myself to hold these shares rather than just waiting on the capital appreciation. So it helps a lot. So same thing with AMD actually. The AMD was freaking nuts, man. That thing is a monster. So I had sold a covered call for AMD at the $177 strike, $177.50 strike, that which also expired on Friday. Collected $70 there. For a while, I really thought that they they were gonna get called away because on July 31st, AMD was at freaking $185. That is nutty, man. Like this is absolutely freaking crazy. And I was like, if it ends up being the case, then I would have let it go. But ends up being that as soon, it hits like 185 mark, it decided to sell off as did the rest of the market. So now I'm holding AMD, and next week they are reporting earnings. And man, I don't know what's going to happen. I feel like they're priced for perfection right now, and so many companies with reporting so many great earnings, yet they're still selling off afterwards. So I believe they report earnings on the 6th. Let's just make sure 5th actually. My bad. 5th after hours. So really the move will be happening on the next day essentially. But yeah, that's something that we need to think about. Do we buy a put as a hedge, or just let it roll? If it goes south, it goes south. If it goes north, how much does it go north? What could it possibly, like, what does it need to do to go higher? Because if you just think about it, just in the last month, it's up almost 28%. That is nutty, man. That is crazy. Um, I think I may actually just sell a covered call. The other option would be to get a put. Have not decided, but obviously you need to do it soon because 3rd, 4th, so they're announcing earnings Tuesday afternoon. That's creeping up quick, man. That's creeping up quick. So just to move down, I had sold last week a $10.50 put on TSLL ETF. Where is the history here? Right here. So I had sold one contract, collected $24, which was, it doesn't seem like much, but that was about 2.28% return on the money on a weekly basis. That's not bad because you have to think about it. This is only just $1,050, but if you play them right, they are leverage ETFs. They're not good for long-term holding. This is not financial advice anyway. This is just some degenerate on the internet just speaking into his mic. And I don't even know who's listening to this, but yeah, this is all bullshit. Anyway, I think I can scale it up. But who knows? We'll see. But yeah, 2.28%, not too bad. And it did close below the 1050 mark. So I did get assigned, as you can see, and I'm up slightly on this. And this is another one that I'm not sure what I'm going to do with this. We'll see what happens in the upcoming week. If it is close to, even if just the 1043 mark, I think I'm actually just going to sell a covered call, collect more premium there. These are not, I'm not looking to hold this long term. So that I have no concern if it does end up being called away. The other thing, so Oscar, I did give into the meme mania. I think the company does have some merit. I'm not fully committed to this just yet. Um, Initially, so this is actually something that I rolled into next week, which I don't know what's actually going to happen because they also are reporting earnings for the upcoming week. My initial position was a $14 put expiring last week, and it was below that. So I had collected about $25 to open that position, and obviously it went below, and I didn't feel like I wanted to take on the shares right away. So I bought that back for 62 and rolled it down to 13 and a half and expiring next week on Friday. So it's not, I collected a little bit more money, but it's not really about that. If it makes sense, right now we are. What are we doing? Yeah, so $25 collected a little bit more there, but also rolled it down by $50. We'll see what happens. If I get assigned, I get assigned. We will reassess afterwards, but I'm not, like I said, I'm not married to this position. I guess I can go over my stats up until this year. We have collected about almost $7,800, and that averages out to, excluding any interest, all that stuff, it's about $242 a week. Not too bad. Annualized, that's about an 18% gain that we are on pace for. If that ends up being the case, then I feel like that's a pretty good year. And that's what I'm tracking to. I want to see what I can do on a per week basis, and really that's the number that we're trying to scale up. That's where we are measuring ourselves to, because even if I keep this pace at 18, almost 18.5%, it ends up amounting to almost a little bit over $12,500. But you're gonna have to take out taxes, so it'll probably like fall down to, I don't know, something like 9,000, 9,500. We'll see when that time comes and we need to make that calculation. But we're doing okay. It's I try to keep it. My goal is to be in the range of anywhere between 12 to 20%. And you might say that, hey, well, this is such a large spread. Why? And guys, you don't know what's going to happen in the market. 12%, I feel like it's doable if you're doing conservatively. 20 is doing actually really great, but it all depends on the market conditions, right? So sometimes stocks go up, you take your picks and they just keep going up and up and up, and things are easy. Sometimes it's not. And I feel like I went through those waves already this year, because at one point I was around like 25%. I think the highest that I hit, yeah, like I was a little like in March, I was like clicking away, and I was like almost like 28%, and slowly started to like dwindle down and down and down because I started to get a little bit more conservative. But that was my decision, and that's what I chose to do. You can do what you want. As I said, this is not financial advice. Anything you do, um, that is on you. This is not financial advice again. I'm not your financial fiduciary. Do what you got to do, man. I'm just like I said. I'm just a idiot, degenerate, just talking to myself online, hoping no one would actually be listening to me and be stupid enough to do what I'm doing. Like, this is just for entertainment purposes. Period. Anyways, rant over, guys. If you have watched up until this point, hit the like button, hit the subscribe button. If neither of those, leave a comment below on why you think my video sucks or why my position sucks, why my account balance sucks.